Hey everyone, I'm Charting Man Dan with the Chart Guys. I like to wear robes and trade stocks. In this video, we're going to check in on the broader market and what we got in reaction to the headlines in Israel over the weekend. We're going to check in to see if the bulls are for real in the bounce and momentum turnaround. There are a couple key check boxes that still have to be checked, but this is reminding me a bit of early summer. I'll tell you what I mean. So since we last checked in, we had a big time turnaround day on Friday where we had an initial bearish reaction to the jobs numbers into a V-shaped bounce. We were watching this S&P 500 12-hour falling wedge that ended up having a really nice bull break, and it was a drastic shift in momentum. And so now we are looking at the daily time frame, and we're following through a little bit. And the simple statement for me is as long as the futures charts are holding 4-hour EMA 12 support, which is exactly what we bounced off of at the low of today to confirm the 4-hour uptrend, as long as we're holding 4-hour EMA 12 support, I'm a bull. Lose it, I will reassess the situation, but this was daily oversold conditions for the S&P 500, bouncing off monthly EMA 12 support, and this is definitely enough to try and get a weekly bounce going, which we now have underway. So I'm a little bit more risk on. I have a bull lean on things, and that will shift when we lose 4-hour EMA 12. There's still a lot of proving that needs to be done. And what this reminds me of is, like I said, May of this year. And that was right before the bulls took over in a big way. And I'm not necessarily saying the bulls are about to take over in a big way, but what was key then for me was statements like the S&P 500 is positioned very well if regional banking fear has hit its climax low. And if the financial sector and the other weaker sectors at that point in time, IWM, the growth names had not done anything on the summer. And my mindset was look for the laggard names to go bullish. And if the regional banks have bottomed and if the laggard names go bullish, the S&P 500 is positioned extremely well to benefit from that. And so my mindset again is, if XLF, XLV, IWM, if they all can confirm daily uptrends from here, that will be a significant marker in shifting sentiment for me. And the other thing that reminds me of back in May is my entire Twitter timeline is just all certain bears. They are just so confident and certain, and the market loves proving people wrong when a lot of people get a certain idea about things. So I'm open to the long side, and we got to see the S&P 500 confirm a daily uptrend as well. Just looking at SPY here, we've got potential for an inverse head and shoulders. If we top out from here, we'll need to confirm the higher low and higher high. And at this point in time, it's a weekly downtrend that confirmed without much follow through. And again, a monthly higher low is the most likely scenario. Why can I say that? Because anything above 376 is a monthly higher low. If the bears are going to convincingly do anything, we've got to lose monthly EMA 12 and eventually confirm a monthly downtrend. And so with regards to headlines over the weekend, again, this is Trader Dan that's talking, terrible, tragic events and all that. But just like Ukraine, in the sense that, headlines had some volatility initially, and then the market just stopped caring about it. If there's escalation with other countries getting involved in real tangible ways, that could change. But in the absence of that, I'm going to be viewing it as a non-event from a market perspective. And so keeping an eye on the headlines, but not, sitting here all day looking at the 6 updated headlines of things that aren't impacting the market. So SPY has to confirm the daily uptrend. And again, just quickly down the list, the Nasdaq. And one more thing to talk about Friday, when all major sectors are at the high of the day or at the low of the day at the same time, do not trade counter that direction. And that happened late morning on Friday. And the bulls, any bear that entered from that point regretted doing so. And so again, just keep that rule. When XLF, XLV, QQQ are all hitting the high of the day at the same time or the low of the day at the same time, do not trade counter that direction that day. It will help you far more often than it makes you miss an opportunity. The Nasdaq, daily uptrend confirmed. We double bottomed. Remember last week, it was all about, does the Nasdaq join the S&P 500 at fresh lows? The answer is no. We held support and broke resistance. We're in a daily uptrend. The Nasdaq right now is a weekly downtrend confirming with 0 follow through. What do we do when we confirm a trend with zero follow through? We zoom out and look for a flag. Again, you show me this chart and I don't see anything wrong with it from a bull perspective whatsoever. That can change. I'm open to it changing, but this is an extremely healthy chart. Considering that the Nasdaq went straight up for 6 months to the tune of 37%, the bulls could not be asking for better monthly consolidation right now. And again, it can change, and we'll see it changing if it does on high bear volume. But the burden of proof is on the Nasdaq and semiconductor bears. The bulls are just fine. They want to just keep doing what's been going on because they are loving it. Because Meta is a monthly bull flag testing 52-week highs. Google is testing 52-week highs. And there's so many names that are just fine. And so keep this mindset to break the market up. Semiconductors and Nasdaq, burden on bears. Bears have to prove to me that these are not monthly bull flags. Here's SMH. How does that chart look? Considering we went straight up to the tune of 100% almost, extremely healthy consolidation. That can change. Bears have to prove to us it's changing. Other side, bulls, the burden of proof. XLF, bulls have to prove to us a daily uptrend. Whenever this bounce tops out, we must hold a higher low and higher high. We have earnings beginning for the financial sector at the end of this week. Midweek, we've got CPI, PPI, Fed FOMC minutes, jobless numbers. But for XLF, XLV has space for a daily higher low now. IWM, ARKK, growth names, higher risk, higher reward names, all of them must confirm the daily uptrend. If they confirm these daily uptrends, the weekly bounces follow through. And we then start to see risk on enter the market again. And I'm looking at a bunch of really beat up names to try and shift momentum as well. We'll look at some of those names in just a moment. The bear side of things, SPY. Weekly lower high is the most likely result of this bounce. Anything under 452. Bulls would love another couple percent bounce to try and make it, an inverse head and shoulders type of setup, but we're not going to forget. And this is where, again, a lot of traders get tripped up. We're looking for a monthly higher low. We're looking for a weekly lower high. I'm looking for a daily higher low. It's different on each time frame. One more note and lesson from today. When you have an equilibrium and it breaks, zoom out. In my early trading career, this 5-minute bear break on QQQ this morning would have faked me out very often. But we knew that if the low of the day holds, it's a 15-minute higher low and a 2-minute falling wedge shaped up and broke bull for the 15-minute higher low. And so we did not get faked out by this bear move, and we eventually broke bull. And the reason that we could be not faked out is because an hourly higher low compared to the low of Friday was the most likely result of any morning consolidation. And so I could keep that in the back of my mind. That hourly higher low is coming eventually. So I got to keep an eye out on the shorter term time frames for scenarios where it's potentially shaping up. So NVDA started to see a little relative weakness today. It's just a daily inside bar, but there's a resistance zone 460 to 466 we're watching. We know a weekly lower high is the most likely result here. So if the bears are going to take over in the market, what does that mean? It means Meta must roll over. Google must roll over. You cannot have these major names hitting 52-week highs if you're going to see fear. And we have to see NVDA confirm this weekly head and shoulders. So if the bears do start to say, hey, you're looking in the wrong direction, here's some high bear volume. Here's XLF and IWM failing to confirm a daily uptrend, and they're hitting lower lows. Then I start watching for an NVDA weekly lower high, potential swing short. But the burden is on bears for NVDA and semiconductors. The dollar had a really nice 12-hour head and shoulders we were watching on Friday. And that confirmed. And now we're on the verge of confirming weekly consolidation. It has not happened yet officially. 105.95 needs to break. But 4-hour lower high, testing support right now. If it holds, there will be a 4-hour equilibrium into tomorrow. But again, we're knocking on the door of support. The bond market was closed today, but there was reactions here. And I didn't, but got word from a major player in the bond market who's a relative of a friend, and they said that it is overseas trading. So they know more than I do about bonds, that's for sure. And so it looks like We double topped on the 10-year to end last week, and now we're breaking this base of support, and we're looking at weekly consolidation trying to take place for the 10-year and the dollar. And TLT is trying to get the weekly bounce underway. TLT will have to confirm a daily uptrend eventually, but again, just some signs of some shift. And if this is the dollar and the 10-year topping out for multiple weeks of weekly consolidation, the broader market bulls can benefit. The metals are benefiting. They've gotten their oversold bounce finally going. Gold and silver bottomed on that jobs claims turnaround, V-shaped turnaround. So gold, whenever we top out, have to confirm the daily uptrend, add it to the list. IWM, XLF, XLV, ARKK. Gold, silver, all have to confirm daily uptrends if this bottom is going to be meaningful and longer term. And then we'll zoom out and we'll scout weekly lower highs in the metals to potentially shape up as well. Tesla inside bar today, a little bit of relative weakness. There was a headline over the weekend about decline in sales in China year over year. And again, just knowing that earnings are 7 trading days away, it's looking like this weekly equilibrium is going to be determined by earnings. Even if we break before earnings, I wouldn't trust the break because the earnings reaction is going to dictate a bull break to test the high of the bounce or a bear break to test recent lows. But it's a beautiful equilibrium. I really dislike when beautiful clear patterns have the unknown coin flip of earnings that lead to their breaks. MSOS, daily stair-step drop over the last 8 days, looking for a weekly higher low, trying to hold weekly EMA 12, started nibbling back some positions for a weekly higher low attempt, doing so very slowly because the bulls still are not proving much. But I like CGC for a potential turnaround here just because, I looked at CGC this morning and it's hitting fresh lows and down 7% or whatever it was. And then I look at the end of the day and it's closing flat. That's a big turnaround. That's a bear break with no follow through. A weekly higher low is the most likely scenario, and it's a 4-hour falling wedge. And so CGC bears are looking a bit exhausted, and we're watching for this 4-hour falling wedge to break bull this week. What do we need to see? We need to see an hourly uptrend confirm on CGC. We need to see increasing bull volume, and we need to see a break of 80 cents. But keep an eye on it the next couple of days. Other places that I'm looking for weakness to try and turn into strength. PLTR has been standing out very strong. Daily uptrend confirmed, benefiting from the weekend headlines, it looks like. And one thing that stood out to me is PLTR daily time frame had a head and shoulders back here, and we double bottomed at neckline support and got another leg up. PLTR weekly head and shoulders. We double bottomed at neckline support to the penny, and the bulls are showing back up. This is a monthly higher low set. Back test EMA support and hold it. We're looking back up to 2024 to try and continue this monthly uptrend. PLTR looks great. AI is way weaker, but I'm interested in AI. AI has the tightest daily range. If you go back and look at the last 2 weeks and the range that we've seen here, and you compare it to the last 6 to 12 months, it is the tightest range that we've seen. We know volatility is coming. A monthly higher low is the most likely scenario. Anything above 1679, it's still a daily downtrend, but it's real tight. And so we're watching for a break. PYPL, look at the range of the last 12 days, 5% range, and find me the last time a 12-day period had a 5% range or less. The answer is it's been at least a year. Volatility is coming. We're getting tight, and it tells us to watch for the break. And so we'll see if PayPal can shape up the falling wedge type pattern. We've been watching it for a very long time, very patiently. Is the shift that's undergoing, the shift that is underway, again, it's a 2-day shift. The bulls have proving to do. But can this shift continue to shift? XLF, XLV, IWM, ARKK all have to confirm daily uptrends. But I'm watching for it. So XLV, another reason I'm watching for it is XLF is a monthly equilibrium looking for a higher low. IWM is a monthly equilibrium looking for a higher low. XLV is a 2-month equilibrium looking for a higher low. If these longer term patterns form these higher lows, it will be with daily uptrends confirming as the first start of it. So XLV, solid bounce the last few days from daily oversold conditions. When we top out, can the bulls confirm the daily uptrend? And that 2-month EMA 12 is key. Look how long we've been holding that on XLV. A decade. If this tight range breaks bear, it's going to be, whoa, this is the first change in the healthcare sector we've seen in a decade. The character of this chart is changing. If we do not lose 2-month EMA 12, we're heading to all-time highs. Burdens on the bulls on the daily time frame for XLV. Burdens on the bears on the long-term time frame. And the bear break would be 122.11. Healthcare, no, the financial sector, daily inside bar. This is the weakest of the major sectors right now. Bulls need another leg up to gain the confidence that they've got the space for the daily trend change attempt. It would be an inverse head and shoulders if that were to shape up. Daily EMA 12 resistance, again, still proving to be done. In the end, it's going to be earnings at the end of the week and the start of next week, which dictate whether a temporary bottom is being set in the financial sector or not. But keeping an eye on it in the meantime. IWM still weak, EMA 12 resistance for a month. Bulls aren't proving anything here yet. Burden of proof on the bulls here, burden of proof on the bears, Meta, Google, Nasdaq, semiconductors. Utilities still trying to bottom. The flag, the bear flag confirming with zero follow through. Straight into a reversal. Just like oils, bull flag confirmed with zero follow through, straight into a big pullback. So whenever utilities top out, they've got to confirm a daily uptrend, but it's looking like a climax kind of bottom as we're looking at rates potentially hitting a temporary or longer term climax kind of top. Every day we'll get new information as to whether this is a long-term top or a short-term top in the dollar and in the 10-year. But still keeping an eye on XLU and NEE. NEE is weaker. Bears are still defending resistance. We rejected from the high of Friday, first thing this morning. But look at the 4-hour. EMA 12 has been knocking the price down. And if we clear 50-50 tomorrow, that will be an uptrend confirming, and the daily oversold bounce will finally be underway. Not sure when we last checked in. I think we last checked in when I was stopped out. Yeah. Oil. So oil, there's your big time drop. There's your gap up open on the headlines. Still just looking for a daily lower high. Again, same as so many things. We've got to confirm a daily trend change back to the bulls if this move is going to have staying power. But we haven't topped out yet, and the 4-hour uptrend is our guide. Higher low established, 84.87 as our new key support level. And natural gas. Nice follow through from the weekly bull break. Definitely getting a little extended in the short term. 12-hour RSI got up into the mid-80s. 4 hours still an uptrend. Potential 4-hour bull flag as long as EMA 12 holds. Again, just like I look at this chart, like right here. This 4-hour chart on natural gas looks bullish, right? This is the monthly chart for the Nasdaq. We went up for 6 months on the summer. We've pulled back for 2 months. We haven't tested EMA 12. And so that's why I understand why so many people with the macro mindset are bearish. I get it. But I just can't ignore the technicals telling me there's nothing wrong with this chart at this point. We need a drastic change in the Nasdaq names if this monthly consolidation is going to shift into unhealthy. So natural gas, looking for a 4-hour higher low. Eventually we'll scout a daily higher low. We'll see how long the bulls can maintain the daily uptrend, putting in this longer term bottom and hitting the highest level of the year or of the last 9 months. So I'm open to the bulls. I know where the bulls have to prove it to me. I know where the bears have to prove it to me. And if we see XLF, XLV, IWM all fade to lower lows, that will certainly have me rethinking my bull lean. But again, 4-hour EMA 12 support on the futures chart is my guide for the week. And we'll see if the bulls can keep this momentum that they have from Friday and now a little bit of follow through today. I hope you're well. Do good things.
Oh, hey. Oh, hey. Dinch.